All right, let's take a look at RSI divergence, how to properly identify it, what to avoid, and how you can use it to identify potentially profitable trades. RSI divergence is a way of identifying potential turning points in the market, so it's a counter trend signal. RSI is available on every charting platform that I've ever seen, so it's probably available on your charting platform. So just go to your indicators and look for relative strength index, add that to your chart, and you'll be ready to go. So what about the settings? I believe that it's best to just start with the default and go from there. So the default settings are 70-30 as the signal levels and 14 periods as the look back or the length. That just means it's going to look back on 14 candles to calculate the current RSI value. So once that's added to your chart, the next thing you're looking for is overbought or oversold conditions. So when RSI pops above the 70 line or below the 30 line. And that just means that there's an extreme happening here relative to the previous price actions. So that's where you need to pay attention, because there could be a potential divergence happening after that overbought or oversold signal. What we're looking for here is a situation where price is going in one direction and RSI is going in the opposite direction. Most of the time, RSI will move in the same direction as price, but when they diverge or they have opposite readings, then that's when price could be turning. So let's take a look at some examples. I got a little lucky here, and on this pair, there's an RSI divergence right away that you can see. So let's take a look at that. The first thing we're looking for again is a overbought or oversold condition. So here is an oversold condition. So price is lower than the 30 signal level. And then after that, we're looking for a higher low on the RSI, but a lower low on price. So we've got one here. So at this peak, you've got this lower low on price, but you've got a higher low on RSI. And that can be seen here. And as you can see, if you took this signal, you would probably be up a little bit, because you probably would have entered at this candle where price started to hook up on the RSI, and you were getting some bullish confirmation on the price chart. And then depending on where you set your stop loss and how you're going to exit will determine how much money you make on this trade, or you might have been out if you're just looking for a 1-to-1 risk to reward ratio. Now, obviously, a bearish RSI divergence is just the opposite. So let's scroll back and see if we can find an example of that. Again, we're looking for overbought conditions. So there's one there, but we don't see any divergence. Keep looking. Here's a big one here, but price isn't, the second peak isn't above the first peak. So we've got a high of, let's see, 89.09. And the high here is 89.02, 89.07. So the second peak isn't higher. If it was higher, then this would be a good bearish divergence, but it's not. So let's keep moving. Nothing there because we don't see a second higher peak. Okay, so this is a good one here. So this is a divergence that could have been profitable. So if you see the divergence, you're going to take this peak here, and then you're going to go up to here. And on the RSI chart, you can see that this peak here, oh, it's not, come on, okay. This peak here is higher than this peak, so you have a divergence. And then you have a nice bearish candle, which would have been a good place to get in. You set your stop loss above here, and then you could have probably wrote it down to at least here, the former support level. So that would have been a nice RSI divergence trade. So that's how RSI divergence works. You're just looking for a divergence between the peaks or the valleys on RSI versus the peaks and the valleys on price. Now, in what condition does RSI not work? It does not work in a strong trend. So let's take a look and see if we can find an example of strong trend. So let's go. Nothing yet. No. Okay, this is probably one. Yeah, this is good. Okay, so we have a strong trend here, and we have multiple divergences here on the RSI. Now, if you took all of these divergence trades, you would probably blow out your account, because we got divergence all the way down to here, yet we have higher peaks going from here all the way up to here, right? So you might be tempted in some cases to take some of these trades. But if you took all of them, you would probably lose a lot of money, and you would say that RSI divergence doesn't work. But it's up to you to identify strong trends and to stay out of the strong trends. How can you avoid this situation? Well, number one, you could have something like a 2 strikes rule where you say, okay, I'm going to take only 2 trades on this potential trend. If it is a trend, then I'm going to stop trading when I lose 2 trades. Number 2, you can get better at identifying strong trends. So in this case, you can see that price is not very volatile. You have very small candles. It's just inching up, inching up, inching up. And that could be a clue that this is going to be a trend. But this is the worst type of trend because there's no chance of making any profit on a snapback. If you had a more volatile trend, you could possibly make some money on a snapback before price moves up. But when the trend is not volatile like this is when you're going to lose the most amount of money. So learn to identify non-volatile trends and even some volatile trends, and have a rule that will keep you out of taking too many trades in a potential trend. If you're finding this information useful, I have a lot more information on RSI divergence coming up. So be sure to hit the subscribe button, hit the bell to get notifications, and you'll be updated when I post information about RSI divergence, backtesting results, more tips on how to trade RSI divergence, and some live trading results also. At this point, you're probably wondering, does RSI divergence actually work? Does it actually give you an edge in the markets? Well, I do already have some videos up, and I'll post the links in the upper corner here. And that will take you to some testing results that I went through with RSI divergence. And I tested on 27 pairs. And you can see the results of that and how you can possibly improve on those results. If you want to become really good at RSI divergence, remember that you need to create a specific plan. Test that plan, make sure that you have specific settings like 14 periods, 70 and 30 signal lines, and test that completely. Don't switch your settings in the middle of trading or in the middle of testing, because that's going to throw off your results and you won't know what to expect with those settings. Once you have a testing plan put together, test it, get the results, and then move from there. If you don't like the results of your test, only then should you change the parameters, create a new trading plan, and then test those results to see what you get. The biggest mistake traders make with any trading strategy is they try to switch things in the middle of trading or in the middle of testing, and they don't actually know what settings are the best for that method. And if you don't want to miss any RSI divergence trades, it's really helpful to get an RSI indicator that will show you divergence and send you alerts to your mobile phone or your email or on the screen. And that way you have less of a chance of missing RSI divergence trades. This is what I'm working on right now, and it should be ready soon. If you have any questions, be sure to leave them in the comments below, and thanks for watching.